Welcome to Truth, Money, and Freedom. Today is Friday, April 26, 2019. One more story here, gang. Again, the stock market. And basically, there is an author here wondering which of the four stocks will trigger the market's Jenga moment. And as opposed to me reading the story here, because I want to keep this short, Tesla, Facebook, Netflix, and Lyft. And guys, I made an earlier video here about Microsoft, but the point is really simple. These companies do not have earnings to justify their stock prices. You know, the price to earnings ratio. That's why these ratios are so high. So when we look at these companies and we see they don't have earnings to justify their stock prices, all investors hope for is that more people will pile into the stock and raise the price. Indeed, this year and last year, stock buybacks have hit a record. We've never seen stock buybacks on this level before. These are, basically fresh money being printed, being given to the big banks loaning them to corporations so they can buy back their own stocks. That's correct, buy back their own stocks. And they use the stocks themselves as the collateral for the money being borrowed from the banks. If the stocks do not go higher, these companies will become insolvent. This is a very dangerous game, and it is leading to all the store closings that we're seeing here, along with apparently less foot traffic. So all I want to do is make sure that everyone understands the way the game is being played here. This has nothing to do with buying stocks for Facebook, Netflix, or Lyft, or, it says here Uber is coming. This has nothing to do with hoping their revenue will go up. Because, without quantitative easing 4, in other words, cheap, easy money flowing into the system from the Federal Reserve, these stocks really can't go up. People are tapped out. Businesses are tapped out. So the only thing they can hope for is that more cheap, easy money flows into stocks, raising the stock value. It's kind of like an Enron moment for the entire stock market. Just raise the value of the stocks. That's all anyone cares about. Earnings don't matter anymore, for the corporations. Price to earnings ratios apparently don't matter anymore. It's all about just the stock price going up because more people go into it. More people go into it that bids up the stock. So less stock out there bodes well for that. That's why corporations are buying back a lot of their own stocks. On top of which, too, they need to replenish their stock funds that they can give to their CEOs and boards of directors as part of their compensation packages. So this is really an illusion anymore. The stock market just isn't real. And I just want to make sure people understand that. If you guys have any questions about that, please put it in the comment section. I do realize there are some stocks out there that are undervalued. Trust me, I get it. But these aren't the ones that are going up. The ones that are overvalued are the ones that keep going up. That kind of reminds me of 2000. And I remember 2000 very well. In the 90s leading into 2000, the dot-com crash. And we saw stocks just go up and up and up and up when they didn't even have a business yet. All they had was a business model. And, pets.com was, the one that everyone seems to really remember. But there were others. And yes, there were some corporations that came out of that with an enormous amount of revenue and built extremely successful businesses. Amazon comes to mind. So that came out in the 90s. Amazon survived and indeed thrived. And there are others that came out of that time period that survived, but there were a lot more that failed than survived. We just need to remember that. So these are, with these upstarts right now, we got Lyft and Uber and everything. These guys don't even have within their business plan any profits for literally at least 5 years. There's no profits coming in, and they're selling these stocks at like $80 a piece, and absolutely no profit, none. Of course there'll be no dividends either. That's not even in the plan. So this whole thing is a grand illusion with the stock market. all hoping that people will buy the hype and buy into the stocks. That's all there is to this. And I'm just warning people to be careful. And I know, some people may be saying, hey, listen, TC, you know, it's difficult, because you just put out bad news on your channel all the time. Well, it's not about putting out bad news. It's just about informing people so they can actually do something about it for themselves and their families. I've said on here, in no less than a dozen videos, do not take out any new debt if you can avoid it. By the way, I'm not a financial consultant. I am not trained that way and everything. I'm just letting everyone know what I am doing for myself and my family. Um, do not incur any new debt. Pay off old debt. Try and get some gold and silver. Try and get some crypto. That's what I've done. And then basically, when the wealth transfer happens, a lot of that bond money should be going into precious metals and cryptocurrencies because they are the only undervalued assets right now that I can see, apart from possibly oil. But there's reasons why I don't go into oil, and I'll explain that in a future podcast. And as far as the wealth transfer goes, if any of you are interested in my vision of what will happen with this wealth transfer and how and why and how much, just comment down below, because many of you have watched Mike Maloney videos. Many of you have watched other videos from other people who actually look at the economy in a granular level and understand that we are about to go into the biggest wealth transfer in human history. And if you're not positioned for it, you will miss out. And if you miss out, your progeny will as well for probably 2 or 3 generations. So that's why it's very, very important to keep some of this stuff in mind and understand what undervalued versus overvalued assets are. Everything's overvalued. Real estate is overvalued. Stocks are overvalued. Bonds are overvalued. Oil probably is not. But like I said, there's reasons why I don't go into oil. But precious metals are definitely unloved, hated, kicked around, and are, dismissed easily. So that's a good time to get into assets, is when they are absolutely hated. And it's counterintuitive, and you tell people you get into precious metals and they go, oh my gosh, you are so stupid. You're so dumb. No one wants precious metals, except for you. Well, that's the perfect time to get in, is when no one wants them. Same thing is true of cryptocurrency. That is an asset class. Whether we want to acknowledge it or not, it doesn't matter. It's an asset class now. So that is one to be considering as well. And I'm not talking about getting into all the minutia of cryptocurrencies. I'm just saying, it might be a good idea to just get some Bitcoin. Just hold on to Bitcoin, rather than getting involved in the trading of it and, trying to make money swapping from one crypto to the other, watching the ratios in between Bitcoin and Ethereum, or Bitcoin and Dash, or Bitcoin and Litecoin, and then trading in between them. No, I'm not saying to do that. I don't have time to do that. I suspect many of you don't have time to watch these numbers constantly and try and make money off of it. Just getting a little bit of Bitcoin and just holding on to it is what I have done. I also have many other crypto, but I'm not trading. I'm just holding on. So that's what I'm doing, or what they refer to as hodling. Hold on for dear life. Hodling. I don't know how it's pronounced these days. So that's the reason why I bring you this information, is to make sure you guys understand the debt load that we have here in the United States, and that it is not sustainable. There's many other articles. I have to go to work today, but I can't do any other videos today, but I wanted to do another one showing the debt level and how that affects individuals as well as families. And it's huge. Every single person in the United States owes the federal government $200,000. A family of 4 owes the government $800,000. That's the real numbers. I mean, whether we want to acknowledge it or not, we want to look it, right in the eye and understand that this is not payable. We cannot afford to pay it back. So basically, the system knows that these debts are unpayable by the citizenry. It understands this. And because of this, there will be some kind of an inflection point where basically money changes asset groups. And that's what we call the wealth transfer. And it's not just because the debt is unsustainable, it's because they realize that basically the value of a certain asset is not sustainable either. Remember, we talked about PE ratios in the last one. Well, the same thing is true with bonds. The U.S. bond market has been in a bull run for 40 years. There's never been a bull run that I'm aware of in history that has lasted that long. Never. They all have corrections. The bond market has not taken a correction. And when it does, it's going to be massive. And that bond market has a lot more money in it, along with the derivatives, than the stock markets could ever hope to have. So it is a huge, huge, huge amount of money that will transfer into another asset class. So whenever that happens, remember now, I did a video just recently with conjecture. The Federal Reserve wants to keep this thing going. They want it to keep going forever. And I don't know how long they can keep it going, gang. The Federal Reserve says they can keep it going another 10 years. You know, that's central planning right there. Are they right? Can they keep it going for another 10 years? It is possible, but the unfortunate thing is if they do manage to keep this thing going for another 10 years before we have a quote-unquote financial collapse, we will have a melt-up, and that's hyperinflation. I don't see any way out of that. There is mathematically no way out of it if they want to keep this thing going for that long. So basically, incomes will not match inflation. So you guys want to know what that looks like? Venezuela, Zimbabwe, Weimar Germany. Argentina is starting to go through very big inflation right now, so you could look at that as well. It's not pretty. And then eventually, all your money that you make at your job, all you can afford to do is buy food. So having storable food along with, possibly some precious metals, cryptocurrencies is a good idea too. So, but if they want to keep it going for 10 years, all that tells me is they want the people in as much pain as humanly possible. Well, that makes sense because the governments and the banks are filled with psychopaths and sociopaths. Oh, that's pretty much all I have time for right now, gang. I just wanted to let you know about this article and a little more of my thoughts on the economy. You guys have a wonderful day. God bless you all.